This is episode 1170.
Folks called us up and they said, this is what you folks have been talking about, that these models can be tailored to certain business processes that eliminates the need for further or continued investment in SaaS. We were calling it, Jack, over a year now, leapfrog SaaS and take control and go to the agentic AI layer. Hence SaaS pocalypse, where the market finally woke up and said, yeah, there is an alternate path to modernization that is outside of committing to a particular siloed path in technology for a business process software.
Over the past year, something unusual has been happening in conversations with investors and executives alike. The question isn't just whether AI will improve productivity. It's whether it may fundamentally be changing how companies modernize their technology stacks. My guest today has been watching this shift unfold from a unique vantage point inside the enterprise software ecosystem. You'll hear him describe the moment, widely described today as the SaaS apocalypse. That is when AI developments suddenly erased more than $250 billion in SaaS market values in a single day. In our discussion, we explore why that moment matters and why CFOs like Michael Perica may just find themselves at the center of the next wave of enterprise transformation. Our talk with CFO Michael Perica begins after this.
They say do what you love and the money will follow. My passion for making life beautiful led to a successful design firm, booming online sales, and a TV show. It also led to chaos, endless spreadsheets, and no single source of truth. We couldn't scale, so we chose NetSuite by Oracle. Now I get immediate visibility across the business, from revenue to customers and fulfillment. Clean, simple, beautiful. NetSuite is critical to the success of my business.
Hello, CFO Michael Perica is back with us. Before joining Rimini Street, Michael spent a dozen years on Wall Street in equity research before moving into operating finance and serving as CFO of Alpha Technologies. Today, as EVP and CFO of Rimini Street, he sits at the intersection of investor expectations, enterprise software strategy, and AI-driven transformation. Michael, welcome back to the podcast.
Thank you, Jack. Always a pleasure to be here.
So early in your career, you had unusual access, from what I recall, to CEOs and CFOs while working in the capital markets. How did that experience, when you look back, how did that experience shape how you learned maybe to ask business questions? You know, you had a confidence perhaps, but can you reflect a little on that?
I sure can, because it was really instrumental in positioning myself for the various CFO roles that I have had and that I have today. The founder and leader of the organization, before I first started in capital markets, opened my eyes, as we discussed previously, as to my early access to captains of industry and CEOs and CFOs. And I conducted a lot of my work learning from these folks and having access to what they do, how they do it within these organizations. And that led me to building my career to get more of a path to become one of those folks, versus in capital markets many times on your sell-side equity research, folks go to managing money that's more on the markets centric. And it led me to the other path. I was more intrigued by seeing something in the market, developing something, bringing it to market on time with the right price, and then capitalizing. More the tangible side of things versus market efficiency. So yeah, that was really instrumental in positioning myself and building my career to be an effective leader in finance as we stand here today.
Would love to just see if you could just reflect a little more on that. I mean, what did you notice about these leaders? And there might have been CFOs and CEOs side by side, but how they actually thought, how they, their mindset when it came to strategy decision making. What are you seeing? What were you looking into?
So, Jack, it was a really appropriate point where I didn't discern immediately, but as I interacted more and more, the most effective executives that I interacted with were thinking on the high level strategy first, and then to push down and operationalize and execute on the strategy. Where there were many, particularly with the evolution of the CFO chair, that were very process oriented. We have a tendency, those of us that grew up in the accounting side, more of the left brain, are very process oriented and are looking to be on time, be on track, enhance a process, which is important, but is that aligned to strategy? And that's where it took some time to realize that those that were thinking strategy first and how our daily interaction, our daily continuous improvement is aligned to operationalizing that strategy. So it's a different mindset, a different approach, and how executives can have different impacts in an organization.
Now, it's one thing to observe and discuss it and hear about it, but when you transition from equity research to operating finance, we'd love to zero in on that chapter. What was the steepest learning curve? Jumped over to the operating side.
In no uncertain terms, I really got a very quick lens, and I realized I had to have an education on the intricacies of the accounting relative. It was a manufacturing concern that had hundreds of thousands of items that could be constructed, and and how difficult it was to really understand your unit economics and the continuous improvement that was needed there, and the complexity of the systems, and the realization that just because one has bought the latest and greatest system or software, that in and of itself doesn't dictate you're going to have good intelligence into your economics, much less driving deep into your unit economics. It was something from the outside looking in that one thought that I had the impression that it was all at the fingertips. You just click a few buttons and things are taken care of. And that still doesn't exist today. It was quite an eye-opening experience.
Now, I'm going to jump a little bit ahead. At Alpha Technologies, you help position the business for a successful exit. What did that chapter teach you about the difference between financial reporting and value creation?
So, I'll use a age-old phrase: timing is everything. And and value creation obviously can come in many forms, but particularly on an exit, in no uncertain terms, running an appropriate process will yield maximum value. And there are many ways to see maximum value and or realize it. But it was something that it was a fun process, and it's nice to do a market check and see what the market thinks of the business. There are a lot of folks that have insights into where there is value that you may agree with, and areas where they don't see value that you may not agree with. And it's something that that is a healthy thing to do for any organization that is evaluating its next step in its journey. And it's always good from a finance team perspective to keep that in mind, if one were to run a process and or conduct a market check, are we ready for this? And not only from an overall, have we professionalized our process? If you're a private entity, this is less applicable to a publicly traded entity where there isn't an option in that regard. It's something that one should think of, because the cap tables are rarely static forever. And this is something that it would prepare one if they are in need for an equity or a credit raise. That if you, because the process are not too dissimilar, just a little bit more involved. So it's something from a value creation perspective that is synonymous with capital needs, and that it's really if one can think of it that way, you'd be very well positioned for future capital needs, not just a liquidity event.
For those finance leaders who might be contemplating such a process in their future, in terms of the time frame, would you offer some advice that might sound something like, whatever the time frame you're thinking, add another 30% or double it, or what would reveal to us something of your expectations as you went into the process?
I think adding a 30% is probably optimistic. It's probably more at a 50%, right? Your advisors will come in and give you the deck with the whole process and a timeline. And it's fairly rare that that's not going to be at least 50% longer. All organizations, irrespective of whether they have a need to offering product or services, they go about it in unique ways. I've said many times that, you can show me a product that's identical, but the process with which it came to market will be completely unique for an organization. And that's something that your outside advisors are not going to see. They're not going to know. They're going to make previous assumptions. But the good folks will come in and really understand the process, the organization, and how it comes to its offering and product and services, and we'll have to uniquely position that. And all of that, if it's done correctly, is work to be done up front. So yeah, the plus 30% possible, but I would say, when you get that deck on a timeline, add 50% to that minimum.
Now, you've worked across several industries: manufacturing, energy systems, and enterprise software. Is there a particular industry transition you think stretched you the most as a finance leader?
Certainly on the manufacturing side, in the especially with both I sat in the CFO chair at two manufacturing concerns fundamentally that had services components and some software. Before I came to the software support and enterprise software, where I sit now at Rimini Street. The manufacturing side is, from an overall business model perspective, is much more complex than on the services and intangible technology side here at Rimini Street business model. That doesn't mean the offerings are a commodity or don't have complexity. Very complex what we do at Rimini Street on the hardware, the manufacturing side. Easier to develop a Me Too product, but the business model of developing, managing a supply chain, building, constructing with all the different possibilities and getting it to your end customers or clients is a much more complex business model. And so there are different aspects, and I have this conversation with my fellow professionals, and when I speak in front of finance organizations, that don't confuse a commodity product or service or proprietary product or service with a commodity business model or a complex business model. Those are two different things. And it takes a different approach from a finance executive or any executive for that matter. But definitely I was happy that I had the sitting in the chair with the tougher business model, more complex organization initially. Really set the pay, and gets you thinking in a different way that is applicable to any business model.
Last time we spoke, you emphasized how mentoring within the finance organization is really important. Wondering, when you look back at your own career, your own journey, was there a period where mentoring played a key role for you?
Yes, it sure did. And mentoring wasn't entirely within the finance organization and or within the finance profession. Some of the best mentoring I received were from executives in other functions in other organizations, and this is something that I speak of frequently, and that is regarding building relationships with your peers and other functions within an organization, and gathering their inputs as to how they see a strategic finance organization versus just closing the books and reporting the news. And that's something that early on was important to me. And I look to particularly other CEOs that not those that I reported to, but what they saw as a successful finance business partner, and those CFOs they have had or seen that have made a strategic difference in their organization. And that's the type of mentoring I have and continue to seek out in my career.
All right. Well, we might have a few more career-related questions for you a little later, but right now we'd like to ask you we have some questions about Rimini Street, which has long positioned itself as giving customers more control over their software roadmap. How has that value proposition evolved, perhaps recently, or has it?
It sure has, Jack. And here we are just over 20 years into this journey to give control to our clients. We called that Act One. And we brought the financial community in New York City this past December to talk about our second act. And our second act, which we believe for our clients and organizations as a whole, is a really exciting time, because the advent of this agentic AI stuff, it's hard to have a discussion these days with the finance professional and not talk about agentic AI, not only finance, across the entire enterprise. That really, people are waking up to seeing this as a technology that one can highly customize and bring control over your data, over your processes, unlike what we've seen historically in any information technology, or any technology for that matter, to assist an organization and how it operates. So this is an extremely exciting time, and we're really at the forefront of this. And such an appropriate question, Jack, because conversations with our clients truly center around how we can help folks take advantage of what's really a watershed moment in applying technology in a custom, specific manner to an organization. It's a really exciting time.
So what are those clients perhaps asking for today that they weren't a few years ago?
So we're at the point where clients are looking at enhancements with regard to particular workflows. What has been used are certain automation tasks, but which did really well, and many organizations utilize these instead of putting in a giant software system. Well, let's automate tasks. Let's focus here now but that's very static. And that's a very defined set of rules. Now, here's the next level is the agentic AI that doesn't have to be programmed and static and won't fail. It can actually train and learn and conduct these tasks as we have evolution, and it can train itself to do so, and that's really exciting. Moreover, it can render so many redundant tasks that were done by us. It can really take it away from the human intervention that's needed and transform the workforce in what they do, your full-time employees. And that's what's really exciting about this technology. And where we specialize at Rimini Street is exactly what you said, is that we give this control and we can give a path to our clients, which is so exciting. And what they're excited about is that we can make it very customized. This is what we do for their business challenges. Going back to my previous comment that you see a product that's out there, and if they're identical products from two different organizations, they got there in two different ways. Everybody has a customized process. And this is something that this technology, where you can, it's highly customizable by definition, that can work for organization, not a large, big software platform that you adjust your business process to utilize this large platform. And that's been the historical way, right, of enterprise software.
You know, when we last spoke, you mentioned how investors were increasingly focused on AI. And I have to believe the questions that the investors were asking you then versus today have changed quite a bit. But can you help us understand better what evolution has happened here in terms of the investor discussion?
So I will say that what has happened is the culmination of this was late January, early February, when Jack, you may be familiar with this and may have had conversations where Claude, the very sophisticated, focused on enterprise tasks, introduced 11 plugins of processes within enterprises that it targeted, these plugins to its core model. That kicked off what we call the SaaS pocalypse, where it was a one day across the SaaS enterprise software landscape and valuations. It took out $258 billion of market cap. Mm-hmm. And to your question, post that, folks called us up and they said, this is what you folks have been talking about. That these models can be tailored to certain business processes that eliminates the need for further or continued investment in SaaS. We were calling it, Jack, over a year now, leapfrog SaaS and take control and go to the agentic AI layer. Hence SaaS apocalypse, where the market finally woke up and said, yeah, there is an alternate path to modernization that is outside of committing to a particular siloed path in technology for a business process software. That this new technology can be utilized very powerful within an organization to solve your business and process challenges or choke points. Jack, we are having different conversations. We're getting the inbound calls on, okay, the Rimini Street approach. The market is telling us that there's an alternative here. And we have been in the business, again, Act 1 for 20 years, giving an alternative to the vendor roadmap. Now we're given an overall alternative thanks to these very powerful models, the agentic AI stuff, and how this can be utilized within your existing landscape of install base and landscape of technologies. These conversations are a whole lot different, and it's as I said, in exciting times that the conversation is coming to a place that we've been talking about for over a year now.
So that's a good segue to ask you about looking at this business and how it's performing. Last time we talked about how you were seeking to build deeper insight into unit economics. We're wondering what metrics matter most right now, given all of what you've shared with us.
So it's I will have to say the relative to tying it together into this key area that we're all talking about and the use of these very innovative process-oriented technologies that you can have customization. A new metric is your productivity per employee spend and technology spend. And Jack, another area that when I have my speaking opportunities and speaking to finance professionals, I have a few more coming up here, I focus very intently on stressing the finance and the information technology /CIO relationship. I encourage all financial professionals to really build a strong relationship, understand the CIOs, the office of the CIO, conversely help them understand the office of the CFO, and take your unit economics, take the access to technology and technology spend, tailor this to your strategy, and best operationalize it and utilize these new tools. And I see this as being an opportunity to make a difference in an organization for the next 3 to 5 years.
Can you maybe give us some examples of use cases that are resonating with your customers?
So I'll highlight, going back to our Investor Day this past December of 2025, we had a Brazilian manufacturer that we had a client testimonial that came on stage, and there was a business process challenge they were trying to solve for 2 years. They came to us and they said, okay, if your solutions are so good, tackle this problem. And they admitted to us later, after we solved it in 30 days with our solution. They admitted to us, they said, we didn't expect you to have success here. They were clearly blown away that we were able to do so. And it really underscores what I'm saying here is that there is so much opportunity for this technology if utilized correctly, if there's proper preparation, and there's just a commitment to seeing it through, that it can make a difference, and you can get these small wins here, and then you can learn from those, then you can take it enterprise wide. But from a specific process challenge, we had a client that we solved it in 30 days.
Inside the finance function itself, then, where do you see AI making the biggest impact?
I see it from a today and over the near term. There's so much what we have in the finance organization: extraction of data from multiple sources, the manipulation of the data, the organization of the data, and getting it ready for review and or analysis. I'm sure I'm not alone. That and this is where your RPA, robotic process automation, was helpful, but that it was very static, etc. That we've been yearning to simplify this and or have the efficiencies on this. Agentic AI can do this, and it can do it effectively. And our approach at Rimini Street is we can do it and aggregate from multiple systems and multiple technologies. That's what we know, and that's what we do. And this is where, near to intermediate term, this is a real efficiency gain. And the efficiency is less about headcount reductions and this is more than just in the finance organization. It's more about transitioning your workforce and eliminating the need for more of an employee base, have greater efficiency moving forward as they transition to review, right? You still want to review all of the outputs, right? And test it in sort of what we know very well, right? Audit and do sampling of all the outputs, because there's that thing called hallucination with all these great technologies and tools. But this is something that is the quick win that can give you across all of the finance organization, and then use that as a template, Jack, to automate and gain these efficiencies with the other functions across the organization. And then you'll have many of these agents doing all of that work for you and giving you suggested outputs, and you get to a review and evaluation process. That's what's exciting about this, changing the complexion of the work for the employee base versus the eliminations, which allows an organization to scale more effectively.
Yeah. As CFO, you're ultimately allocating capital. How do you decide where AI deserves investment today?
So over the past year, Jack, I've heard unanimously across other CEOs, been at many investor conferences, and across the board, all projects, capital decisions are on the table to evaluate, except one: investment in AI. That's the highest priority. It is the priority. There is a certain belief that if I'm not utilizing and seeing these efficiencies and gains, that it's my competitors very well may be doing it, and I assure you they are evaluating it, and you can be left behind. It is appropriate to have it as a priority. It's easy to dismiss, and I would shy away from that. I would strongly evaluate it, because I assure you, I've been having conversations with our clients' prospects and speaking at many conferences across the world. Just spent a week and a half in the Asia Pacific region, and even in some emerging markets, everybody is evaluating these technologies.
Clearly, there's some determination that needs to be made. There are certain AI initiatives that finance leadership might take a pass on. What signals tell you an AI initiative is worth funding?
If there is I would go back to where I indicated a quick win. If there, and I would build certain cases and look at certain processes where we can have a quick win and learn from those. I think, and that will tell you, and then you'll learn a lot on our current landscape, our preparedness of our data, which is one of the leading indicators to failure of an AI project. There is the notion, and this, again, going back to quickly dismissing, is that, okay, take one of these 11 plugins of Claude and put it in there and have it work on whatever one of the 11, and then magic would happen. It is not that simple. However, take a targeted workflow, utilize, evaluate the AI, and look for that success, and use that as a foundation to take a look at areas where it can be successful, and then map that with what is a key choke point in an organization, and target and apply accordingly. Jumping in today with a whole platform of AI is a big lift, and it's a large commitment. Wouldn't shy anybody away from that. And that's one way of going all in. One can go all in by taking a process by process and then expand within an organization. And that's what we provide, right, at Rimini Street. We have partners where we can get a platform in from an AI perspective, particularly our publicly announced partnership with ServiceNow, but we can also do it and apply the technology on an individual workflow by workflow basis. So, there's many ways to approach this. One size does not fit all. But expecting an outcome just by signing up and downloading something is probably there's a little more to it than that.
Well, we are up to what we like to refer to as our finance strategic moment. This is where we ask our guests to share a story of a time in their career when they had a moment of insight or something to begin to look at the world a little differently. What comes to mind?
So, Jack, I have to say it's, and I've had many of these strategic moments throughout my career. You and I have shared some of these, but I can't think of anything more topical than the advent of this AI stuff, if you will, particularly the agentic AI, and the SaaS apocalypse and what the market is telling all of us. It's less about the business model of SaaS. The market, through that $250 billion one-day wipeout, is telling us that this is not the only path, and that there are other paths within an organization to deploy technology. And I would also juxtapose that with the conversations I'm having with CEOs and boards in every investor conference saying, need to evaluate the AI. The CFO teaming up with the CIO, thinking an enterprise-wide, not just finance transformation, enterprise-wide on exploring and deploying these technologies is really a watershed moment for the Office of CFO to make a strategic operational difference within an organization. We have grown in the CFO chair well beyond the process-oriented, closing the books backward-looking, into a very forward-looking strategic role. And by understanding what is available to us and thinking at the highest level, this is a watershed strategic moment for finance professionals to think of using these automation tools and technologies, not just for finance efficiencies, automation, and transformation. Think of it enterprise-wide. And this is an exciting time for us in our profession to truly make a strategic and operational difference within your organization. It's an exciting time for us.
Well, we are going to ask you to look back in time again now. And again, back to that transition away from Wall Street into industry. Why... if you could go back in time, what is it that you would tell yourself as you think about yourself, that chapter, that first 60 days in the company environment? What, there must have been something you wish someone had told you.
Yeah. Well, there is. And I will say it still hits me today, is that, and it was very beneficial, but there was a lot of unflattering, redundant work that I needed to dig my nose into and get to the front line of understanding the business model, the business processes, the systems, and how an organization works. In the capital market space, we're very much in the dynamic strategic side of things. And that was a real wake-up call, getting into an organization and realizing that if I needed to learn, I had to get my nose deep into the front line, walking down a manufacturing floor, and just learning from the bottoms up how organization works. It is not glamorous, but it was something that I'm thankful that I needed to do, and I learned a lot that helped me here at the executive level as a finance professional. It's something, Jack, I didn't see. I thought it was all so simple and all so basic, and I was wrong.
We always like to ask our guests to reflect a little on the personal side, Michael. We're wondering if there's something, now you've been there 5 years. I imagine your colleagues know quite a bit about you, but something from your past, something, an interest that you had, a pursuit, something generally not known about Michael Perica.
Well, if someone takes a little bit of time to know about me, they probably realize I'm what they call a petrol head. I'm I love automobiles. I like quick automobiles. And I actually do a few times a year, I sit myself into Formula cars on some real circuits and run those things around and have a lot of fun doing it. And probably known to have more bravery than skill, which is a difficult combination, but you have, have controls around that, right? And you have yourself in a proper, safe environment. So, yeah,
what was
that's something.
The very first car that you owned? The very first car.
It was the first automobile I purchased. Was a 1992 Ford Mustang convertible with the manual transmission, of course, 3 pedals.
About a book recommendation or a resource recommendation for us. And again, it doesn't have to be a business book. It might be something you escape with.
So my escape mechanism now is actually The Economist. I've been a strong fan of this. And let me stress, in the print version, not the online version. If there's anything I can stress is that I would get it in the print version. But my most recent book that I read, Jack, is associated with the history of Formula One. But that's probably less interesting to finance professionals.
We are finally going to ask you to look forward. And Michael, we're wondering about your priorities for the coming 12 months. What would those be?
Jack, we're on a common theme here, is to look for across the entire organization areas of choke points where we have entirely too much extraction, manipulation of data and information. We have our own AI committee internally here at Rimini Street, and this is something that is top of mind. I'm building global capabilities, GCC centers across the world. And this is a combination of technology and also lower costs, but highly capable resources that can make a difference in the organization. This should be and needs to be on top of mind of all finance professionals. I strongly stress that.
Michael Perica, thank you for joining us on CFO Thought Leader.
Thank you, Jack.